Bloomberg reporter Sarah Fryer caught up with Sean Stiefel, a portfolio manager at Navy Capital, who attended the Roadshow.
I think anything at $20 billion you have to justify the valuation for. Here the questions are around user growth as well as monetization. And I think they sort of dance around the issue of user growth, alluding to issues with the Android, and monetization they touched on lightly. But certainly as the story progresses and at this valuation, you're going to need to see some more metrics.
Hi, joining us from New York is Bloomberg News IPO reporter Alex Barinka and Jennifer Fonstad, managing director at Aspect Ventures. Alex, how'd you get these guys in the street? What happened there at the IPO Roadshow?
So Sarah and I were outside of the Mandarin Oriental in New York today, trying to grab investors like Sean to hear their take. And to his point, the top thing when asked what was your big takeaway that's still on your mind, this user growth was the first thing that a lot of potential investors said to us. Like he said, the executives blamed it on Android, but I heard a lot of Instagram being called out by investors who point to the stories feature that Instagram recently introduced that very much mimics Snapchat. Other folks brought up the new WhatsApp feature rollout where you can send images that mimic Snapchat. So yes, Snap is pointing to internal issues like needing to build out on the Android platform in its non-core markets. But, you know, investors still question the competition factor, and it will surely be on the mind when they're running their comps between the Facebooks and Twitters of the world.
Jennifer, the quote-unquote monetization issue was a euphemism if there ever was one. In other words, tons of people are using Snap. Not tons of people are getting generating revenue for Snap. What do you see as a monetization pathway for this company?
Well, I think the underlying opportunity for Snap is really around the data and the audience. So as you know, they skew to a much younger audience that is a content creating machine, and tapping into that and targeting that audience and being able to use that data much more effectively than a lot of their peers is really where the opportunity lies.
Is advertising, as you see it, the only real opportunity for these guys in terms of revenue? And there's nothing wrong with an advertising-only model. The history of media is mostly about that.
That's been the historic approach. There's a lot of different ways that you can monetize around what you're calling advertising. Very targeted marketing, and marketing dollars are getting more and more segmented. So I think a larger opportunity will be around how they use that data and selling that data to a whole host of different applications. Advertising being the largest bucket, and then how you skew down from there.
Alex Barinka, the valuations here for this business are astounding. For any business, based not just on its lack of profitability, but its lack of gross margins. I mean, the most basic concept of business is sell something for more than it costs, but that's not what Snapchat does. Did you get that kind of feedback from money managers that this might be a good business, it might be a bad business, but it's a very high price?
It is a very high price, and I think it's interesting, and a few people did note that we've seen the price come down. As we reported since October of last year, they were looking at valuations at around 30 to 35 billion. That's down now. The terms are set at a market value of about 16.2 to 18.5 billion. So you've seen those expectations come down as more information about the company has come out. So when you look at where they're spending money, obviously the profitability factor is the next step for them. They talk about that as phase 3. Phase 1 was kind of development, phase 2 was user growth and engagement, and phase 3 is going to be profitability. The biggest cost there for them is their technology infrastructure. And there was some new kind of conversation around that today. The company said it expects the cost of infrastructure, so paying for cloud and storage, to eventually decline as its two providers, being Google Cloud and Amazon, compete on pricing. It also said it's open to building its own infrastructure. So a little bit of new commentary around that right now, and that's so important because that's the bulk of their expenses right now, which, you know, outpace their revenue.
Jennifer Fonstad, I'll bet you would have no complaints if any of your investments could go public at 17 times sales.
That is an awesome number. I think what they're really banking on is that monetization and taking advantage of the massive amount of users and the massive amount of content. It's really up to them. It's their game now to prove that out. It's very common for startups to prove that out in the public markets where they feel that they can start to build predictability into their business. And that's going to be the name of the game. Investors, when you're in a public domain, care a lot about predictability, and being able to demonstrate growth whilst being able to predict and build that predictability into their business is going to be key.
Yeah, I mean, I still think this gross margin issue is a serious one, Jennifer. When, you know, this negative gross margins over the last year, and I know the last 2 quarters looked a little bit better, but those, of course, are the quarters when they're dressing up the IPO, so I would discount, me, the former investor, would have discounted that into an IPO roadshow. But you know, these gross margins were generally horrendous for this business. We're not talking about operating margins. We're not talking about what Alex Brinker was referring to with the expenditures on the cloud. We're talking about the most basic pieces of what they sell.
Well, I think it comes back to a couple of different issues. One is what Alex was referring to in terms of their fundamental costs infrastructure, and they've really been on a tear in terms of users and in terms of content growth, and that has enabled them, that has forced them to not focus on cost just yet until they got to a size where they could take advantage of scale and really think about both creating a competitive dynamic and thinking about creating their own infrastructure. Google also made a very similar exercise when they first started out, and they've built a phenomenal low-cost infrastructure as they started to focus on gross margins over time.
So, Alex Barinko, what's next in the roadshow?
Next, they'll be in Boston. They're heading that way tomorrow, and we will continue to be listening out before they head out to the West Coast. So this process will continue. They'll keep pitching their wares. They'll keep fielding questions from investors. And Corey, I also thought it was interesting today, they mostly just did Q&A for an hour. There wasn't a lot of presentation. So when you think about it, seems like they might feel like they've kind of expressed their message before, shares are scheduled to price next week on the 1st of March. So that would put a listing day on March 2nd. So that'll be where I am putting my focus for the rest of the next 2 weeks.